Welcome, ladies and gentlemen, to a new interview here at Commodity TV. And for the first interview of 2026, we want to dive now into the gold sector. And with me here is for the first time also Nick Campbell, the CEO of Mayfair Gold. Welcome, Nick. Happy New Year and good morning to Vancouver.
Thank you very much. Happy New Year, and good morning to you guys out across the pond.
Thank you very much. Before we begin, we must disclose that this interview is being produced, published, and paid for on behalf of your company, Mayfair Gold. So, Nick, your company, Mayfair Gold, has a very well advanced project called Fenn-Gib, which lies in one of the best jurisdictions worldwide for mining companies in Ontario, Canada. And you also recently published a pre-feasibility study. Before we come to the PFS, please give our viewers an introduction into your company and into the project, please.
Sure. So we're Mayfair Gold. We're a Canadian junior development company. We're very much focused on building a new mine and building a new mining company in Canada here. Our project is the Fenn-Gib Gold Project in the Timmins area of Ontario. Timmins is a storied historical gold district. There's over 100 million ounces of gold produced historically from this area. Still a very active mining jurisdiction, and it's one of the reasons why I got involved with the company is because of the location of the Fenn-Gib Gold Project. It has the best location of any project I've ever worked on. Literally, you drive on the highway, you drive off the highway directly onto the deposit. You're within 10 kilometers of a power substation. You're 20 kilometers from the town of Matheson, 80 kilometers to the town of Timmins. And there's just a whole swath of different mine services that are available in the area. So that makes it a lot cheaper to look at building an asset. If you don't have that kind of access and infrastructure, you have to pay for it all yourself. So that's something that gives us a real advantage when we're looking at developing this asset into a mine. So there's an established resource, 4.3 million ounces in the indicated category, very well drilled off. It's a sub-gram ore body. It's less than a gram. However, and this is the thing that I guess you could call the secret sauce that we identified when we got involved with the company, was there's a high-grade starter zone that comes right to surface. And so we've come up with a differentiated approach to getting this asset into production. I spend a lot of time looking at permitting. It's a very important aspect of getting mines into production, and it's something that's not very well understood by the industry in general. My background is I was at a company called Artemis Gold, quite a successful company that built the Blackwater mine. That was the last company I was at, and they took a similar approach in that they had this big ore body. It's a massive sub-gram ore body. But instead of just going right ahead and building a big mine, they decided to target a high-grade area at the beginning of the mine life and to get it in production at a lower scale throughput rate. And so that comes with a whole bunch of benefits. It's a lower cost, it's lower execution risk, and it allows you to get it into production faster. And so we're taking a similar approach. We could go and build a big mine here. There's a big mine to be built at the asset. There's something like a 20 to 25,000 ton per day throughput operation that you could build at Fenn-Gib, but that mine's going to cost you $1 billion. That mine's going to take 10 years of permitting. You're not going to be in production for 10 years. And that's just not a very interesting story for me. That's not something that I really want to be involved in. I like to build things. The last two companies I was at, we built mines and created a lot of value by building those mines. And so what we've identified is a pathway of working with the Ontario government. Ontario's fantastic jurisdiction because they've created this new one project, one process permitting process, which has streamlined the permitting process. So instead of taking 10 years for us to get permitted, we should be able to be permitted within the next 2 to 3 years. And we can get this into production within the next 5 years. And so that allows us to build this asset, get it into production within the current gold cycle. And I mean, we've all seen what happened with the gold price. It's a fantastic, phenomenal gold price. If you want to really take advantage of this current gold price, you need to be able to bring assets into production.
So this is this Ontario provincial permitting pathway that I could find on your website, what you described now.
Yes. So it's something the government has been working on, but they really put a burner on it because of the geopolitical tensions that are happening between Canada and the United States. The United States is our most important trading partner, and they've become a less friendly trading partner recently. And so we need to attract new investment. And so one of the few ways that we can attract investment into the country is through mineral investment. And so the Ontario government has a mandate of getting new mines into construction and into production. And we have a mine that we can get into construction within the next couple of years.
Okay, that means the mine is a little bit smaller or the production is a little bit less, but the advantage is that you can get it into production faster than a normal bigger mine.
Yeah, so there's a couple of advantages. One, yeah, it is a smaller mine, so you have to be less than 5,000 tons per day in order to go through a provincial permitting process. 5,000 tons per day is a very big underground mine. It's a very small open pit operation, but because we've got this high grade starter zone, we can push around. It's around 1.47 grams per ton over the first 6 years into the mill, which gives you production of around 71 to 73,000 ounces of gold per year over the first 6 years. That doesn't sound like a lot of production, but in the current gold price environment, that kind of throughput can generate $1.4 billion in free cash flow over the first 6 years. So my philosophy in terms of how to create value is very much driven by, there's two big ways that you can create value in the mining sector. One is through exploration and discovery, resource expansion, finding new deposits. That's a great way to create value. However, you need to be lucky enough to have found a deposit, or you have to have the right kind of deposit that's still open to expansion. That's not what we're looking at with Fenn-Gib. There is some exploration upside, but really the second way of creating real value in the mining sector is through execution, and that's what we had at Artemis Gold. When I joined Artemis, it was around a $5 stock. Today, Artemis is a $36 stock. All of that value creation was entirely driven by executing a build, by bringing a development stage asset into production. So we want to do the same thing here. It's a smaller scale mine, but it generates a lot of free cash flow. And once you generate that free cash flow, you can use it to grow the operation. You can use it to look at regional opportunities, or you can look at buying another asset and bringing it into production and turning this into a bigger Canadian gold producer.
Okay. And then let's come to the PFS. You released it at the 8th of January, I believe, so a couple of days ago. And there was some outstanding numbers. And can you give us an insight into the most important highlights? First of all, maybe based on the base case scenario, which means a gold price of $3,100.
Sure. So we looked at two different scenarios. First was base case at $3,100 and an exchange rate of 1.35. It is important to note to remember that we're a Canadian company. Our costs are in Canadian dollars, so the Canadian dollar gold price is actually what is important to us, not necessarily the US dollar gold price. But even at a $3,100 gold price, the payback period on the initial capex is estimated at 450 million Canadian. It's 2.7 years. It generates 896 million in free cash flow over the first 6 years. And again, it gives you that flexibility to look at different opportunities and optionality to either look at potentially growing the asset regionally or look at a different opportunity to grow the company. The other scenario that we looked at was the spot market. And so I got involved in this company because I have a thesis in terms of what's happening with the gold price. And that isn't just what's happened in the last year. That's really what's happened in the last few years. I'm not a gold bug. I'm not the kind of guy who has always been pounding the table in terms of gold prices going higher. But I do think we're in a secular gold bull market that's going to be in place for quite some time. And so I wanted an asset that I could take advantage of that. And so I want to look at this asset based on what's happening in the current environment. And in the current environment, the asset generates over $200 million in free cash flow a year. It generates $1.4 billion in the first 6 years. And it gives you a payback period of 1.7 years. So that's important because we're going to look at financing this with a combination of debt and equity. $450 million Canadian seems like a lot of capital for a company that's trading at around a $350 million market cap. But we don't have to raise all that capital today. We've got $40 million in the bank, and we can unlock a lot of value by delivering on some of these permitting milestones and getting that better valuation in the market. And so I've done this a few times before. I've had some success. At the last two companies I was at was Artemis Gold. Before that, I was at Silvercrest Metals. Both of those were quite successful companies. And I do want to highlight here, it's really important to have very good technical people working with you in order to be able to execute a build. And that's what we've brought here with Mayfair Gold. So I brought Drew Adwell. He's my partner. He's advancing this project with me. Drew is a serial mine builder. Drew built the largest open pit gold mine in Canada, which is Detour Lake. And so Drew has a team of people that he's working with, that we're working with right now on a consulting basis. We'll be bringing them on a more full-time basis over the course of the next 12 to 24 months. And we're going to build a mine. A lot of companies that are our size are focused on exploration. They're focused on trying to attract attention by throwing their deposits or making a new discovery. We are very much focused on getting ready to start construction and to build a mine.
That sounds amazing. When I did my homework on your website, I saw that you highlight there your meaningful insider ownership. So how does the shareholder structure look like, and how does this influence your financing decisions?
Yeah, it's a real advantage, quite frankly. We're 35% insider owned. The largest insiders are Muddy Waters. They own around 17% of the company. Keeney Capital, they're the founders of Mayfair Gold. They own just over 10% of the company. We have another couple of board members that own another 5% of the company. I own around 1% of the company, and we have a philosophy of investing alongside with shareholders. So we've put $15.4 million into the company since October 2024. I've put over $2 million into the company since I joined the company, and including up to the last financing. We had significant insider participation. I put $500,000 into the company. I'm a big believer in putting my money where my mouth is. I was the third largest insider shareholder at Artemis Gold. I was the third largest insider shareholder at Silvercrest Metals, and I'm the third largest insider shareholder at Mayfair Gold. So,
Okay, then you would love or would like to list at the NYSE American index. What are your feelings? Could then change the shareholder structure, or what would this mean?
so I mean, you're always trying. It's oh you the golden goose is always trying to find retail investors to come in and find and get interested in your story. And as a Canadian, a TSX Venture listed company, you can attract those kind of investors, but there's just a much bigger shareholder base in the U.S., and you're a lot more constrained in buying over the counter traded stocks and TSX Venture listed companies. So we're going to be listing on the NYSE American quite shortly. We've got a great ticker lined up for that, which you'll find out when we make that announcement. But when I was at Silvercrest Metals, we uplisted to the NYSE American. We went from trading 10% of our volume in the U.S. to trading 80% of our volume in the U.S. I fully expect the same thing to happen here. We do have a great shareholder registry. We have Oaktree Capital came in. I think we're the only junior development story that has Oaktree Capital in it. This is a $200 billion fund out of the U.S., and they're a generalist fund. So what it does mean is that means I think we're going to start to see more trading volume in the U.S. We're going to be definitely a lot more active marketing in the U.S., and it makes more sense for us to do that after we get that uplisted.
Okay, let's come back to the Timmins Gold District for another question. What does this location mean for you in practical terms? So access, services, power, permitting, and all that stuff.
So, and in Ontario, when the Timmins Gold office of the Ministry of Mines it's just a great office. It's a really supportive office. If you do your job, if you do your work properly, they're trying to get new mines permitted. They're trying to help you. In terms of access and infrastructure, I mean, you can compare us to a company like Probe, and Probe was a good company. It was acquired by Fresnillo, but their asset was located in the middle of nowhere, right? So there was no road access. Like, you'd have to develop all that yourself. There's a significant amount of capital that you need to spend just to get access to site. We have Highway 101 coming straight through our property. So that means that it's easy for us to get equipment there. It's easy for us to get people there. We've got a power substation 10 kilometers away, which means we're going to have grid power, which means we're going to have low cost power. Grid power in Ontario means about 8 cents per kilowatt hour. So cheap power. And there's people, right? And so there is also a push away from the big miners. They work for the big miners for a long time. They get kind of tired of working for them. There's a huge workforce in the Timmins area, in the Matheson area, locally, and so there's people that are going to want to live at home and be able to commute to the mine site. You can do that when you're located 25 kilometers down the highway, and so it also means we don't have to build a camp on site. That is a massive benefit in Canada, and there's some qualitative aspects to that. There are some also quantitative aspects to that. You don't have to build up your own power infrastructure or your own sanitation. You can just tie into a city grid. We're probably going to build our camp in the town of Matheson. But it also means that when people are done working, if they're in camp, they get to go and they can go out in town. If they're in camp and we have a camp on site, they have to stay there. It's a dry camp. There's not much to do, right? So it should be easier for it. It's going to be hard. It's always hard to attract the human talent associated with the mining industry. The mining industry is doing really well. There's lots of upward pressure on labor costs. That's not going to change. But when you have a situation like this, where you can make it a little nicer for people to work on site, that's going to be a big difference maker compared to a lot of other operations out there.
What would you tell investors when they ask you for the most important catalysts or milestones for the next, let's say, 12 to 15 months?
So there's a couple of catalysts that I think are worth highlighting. One is the NYSE American. We're looking at uplisting there in the next couple of weeks. I think that'll be a nice catalyst for us. And we're definitely going to be doing a lot of marketing on the back of that. We also did a confidence drilling program, and a confidence drilling program doesn't sound particularly sexy, but we did the same thing at Artemis Gold. So we have a sub-gram ore body, and some people are skeptical that we have a high grade zone that we could focus on at the beginning of the mine life. And so we did 56 drill holes within the high grade zone. They're all vertical holes around 75 meters deep. So the idea is to do a grade reconciliation between the block model, and it also gives you tighter spacing, so down to sort of 10 to 7.5 meter spacing. It gives you way more data. That helps you with your debt financing. It gives you more confidence in what the grade tenure is going to be at the beginning of mine life. You're going to see those drill results probably come out at the end of the month, and so that'll be a nice catalyst for the company. You can see some of the high grade results that can be generated from the Fenn-Gib gold project. And after that, there's a lot of work that we're doing in the background, which isn't necessarily sexy work, but it's very important work. You'll see some permitting milestones that will be announced. We're also working with the local communities and First Nations. That's very important work. We're looking at hopefully getting some kind of process agreement announced with the Abitibi-Anishinaabe, which will hopefully eventually lead to an impact benefits agreement with the Abitibi-Anishinaabe. There's a number of other nations that we'll also be engaging with over the course of the next 12 to 18 months. But the biggest catalysts for us are going to be related to permitting. We're also doing the front end engineering and design work. So that's the FEED. It's called the FEED when you're the acronym for it. So that's also important because that work gives us a lot of clarity in terms of what the actual cost of building the project is going to be. So we're looking at being somewhere between 70 to 100% detailed engineered before we start construction. That's a much higher threshold of certainty that we're going to have versus most other companies before they start construction. That's because we want to have as few surprises as possible when we actually get to the business of building this mine. It's always complicated. There's always problems whenever you build a mine. But the more work you do up front to de-risk that, the more likely you are to be successful when you actually go through the build.
Okay, Nick. Thank you very much for this insight in your company and in the project. And I look really forward for an update soon, maybe at PDAC in March.
Sure, sounds good.
Thank you very much for this, and greetings to Vancouver. Thank you.
Thanks a lot.
Yeah, ladies and gentlemen, you heard it. That was Mayfair Gold with the CEO, Nick Campbell. You heard it. The company is in really good shape. 4 million ounces in one of the best jurisdictions for mining companies in the world, in Ontario. They really knew what they do. The PFS is very positive, and the permitting process could be very fast. And I would say have a look on this very interesting company. And they're with bye bye from Switzerland.